Greetings. Welcome to my weekend market recap, 26th August 2023. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. I trade actively in the USA as well as India markets. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, X is formerly Twitter, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems and only Q systems for making trading decisions. Q has multiple components. All the components including sector industry rotation analysis, fundamental analysis, technical analysis, even seasonality analysis, all these components run on the Metastock platform. And for the USA market, the technical analysis component runs on TradeStation as well. The Metastock components can be used in the USA market as well as global markets. That was the last slide. Let's continue with the live systems. First, a look at dollar index. If you are following my weekly market roundups, in the last market recap, I had a bullish view on the USA market. Partly that was because of the fact that dollar index at that time stopped at upper boundary, and at that time if you see previous week's candle, it stopped below the trend line resistance. So below trend line resistance at an overbought level, the higher probability was for dollar index to come down. So that was one of the factors I mentioned in deriving my bullish preferred trading direction in the previous market recap. 1 week has passed since then, and now we can see that trend line resistance is broken. So that effect of dollar to make the market bearish was not something that took place. Dollar actually strengthened during the week. However, did the market turn bearish? We may look at the ETFs, futures or indexes, but if you are doing short-term trading like I am doing, and if your trading universe is not only the index constituents but all the liquid stocks like me, then whether the market was bullish or bearish, that is decided not only from the market ETFs, futures, indexes, but better realized from the market breadth inside, because the breadth inside shows what is really going on inside the market. So let us look at Twitter. I shared the previous week's picture for several breadth insights. This is the Q Finder technical breadth of 1 week ago. This is exactly the picture I shared in the previous market roundup. And I mentioned that it was very bearish to the extent that it was looking oversold. That is 1 week ago. Now my preferred trading direction 1 week ago was bullish, because though the weekly was very bearish, Friday 1 week ago was bullish. So what happened this week? Let's look at this weekly technical breadth of the current week using QVital. This is the picture. If we consider all categories, 61% of the setups are bearish. What was 1 week ago? Let's go back again to check. 1 week ago it was 93%. From 93% it came down to 61%. It is still bearish, however it improved a lot, improved by about 30% plus. So that means a number of stocks actually recovered. What kind of stocks? Stocks that would have given weekly technical setup. So my analysis of preferred trading direction 1 week ago worked out well in terms of technical breadth. And technical breadth is very important to make money swing trading stocks with directional trades, because we only make money if the stock goes up after buying. We only make money if the stock goes down after we short. So technical breadth is important. And what is this week's conclusion? This week is still bearish, but what I often say, it is not enough to look at where the market is today, but how it is changing. And if we keep the previous week's picture in mind, that is on Twitter X, then we know that it is actually improving. Bullishness is improving, bearishness is reducing. So that is still having reason, still being one reason to be bullish on the overall market from technical breadth, at least weekly picture. What about daily picture? If we look at Friday's picture, this week's, on Friday also majority of the setups are bullish, 75%, only 25% are bearish. And interestingly, if you look at the reversal category, huge 91% of trade setups are bullish. That means we could probably easily look for reversal bullish setups in the current market. Those setups could be headwind reversal setups, that is trend reversal setups, or box setups at double bottom or sideways market, or a few bounce setups are also there. So both weekly picture and daily picture of technical breadth is telling me that I may continue to be bullish on the market. But this is one aspect of my market analysis. You can see that I look at the market from different angles, but they are not overlapping. They are distinct pieces of information. One is technical breadth, one is sector industry stock breadth, and then of course the market external and internal view. Technical breadth is telling I may continue to be bullish. Let's look at sector industry stock breadth. Again, I would like to compare with previous week's picture that I tweeted earlier. This is a picture that I tweeted earlier, and this is a picture that I shared in the previous market recap. At that time, if you look at the weekly period, that is 5-day period, sector industry stock advanced decline breadth were very bearish. And of course, the longer term 10-day and 1 month periods were also bearish. Today was also bearish, but that Friday 1 week ago turned bullish. That was one reason for me to turn bullish 1 week ago. So remember this picture. This is 1 week ago's picture of sector industry stock breadth. How is that period today? This 5-day sector industry stock breadth. Let's look at live edge, Q edge. Now 5-day period is still overall bearish. If we combine all the three dimensions, we have to say it is still bearish, but it is much less bearish than 1 week ago. So see the percentages again, 64, 49, 52, and 1 week ago from the tweet we can see it was 100, 96, 87. So it is still remaining bearish, just like we saw in terms of technical breadth, but it is a huge improvement from previous week. So again, this breadth became bullish, relatively bullish compared to 1 week ago. That means some stocks had recovered, and those stocks were probably at a very low price level because the market was oversold. We saw that from QH. So these dimensions work in favor of bullish preferred trading direction, and looking at the improvement over 5-day period and the fact that 1 day Friday period is overall bullish, I am continuing to have a bullish preferred trading direction. So far so good. We looked at technical breadth, we looked at sector industry stock breadth, we continue to have a bullish preferred direction. But that is not all. We have to look at other angles, and those angles may not be so supportive. Well, let's look at the bucket analysis first. That is a distribution of all the S&P 1500 stocks across their respective Bollinger Bands. We see 78% of stocks are below mid Bollinger Band. That is bearish, which is okay. Why it is okay? Because we saw a massive percentage, more than 90% of stocks are giving reversal bullish trade setups. If those are reversal trade setups, I expect them to be in a downtrend, and that is in sync with many stocks, majority 78% of stocks being below mid Bollinger Band. That is fine, and it is neither oversold, and of course it is not overbought, cannot be overbought with majority of stocks being below mid Bollinger Band. It is not oversold, it could go down further, but again see not only what is the current picture but how it is shifting from previous period. So if we look at 1 day ago's picture, then 84% of stocks were below mid Bollinger Band, that is Thursday, and on Friday it reduced. So absolute percentage is still bearish, but it is improving. That is again in favor of taking bullish trades. So 3 out of 3 dimensions, bucket analysis, sector industry stock breadth analysis, and technical breadth analysis, they are telling us to continue to be bullish. What kind of trades? Probably reversal trades at support. What about the market view? Let's look at the market ETFs. Let's use Q Elite now for that. SPY, the weekly color is bearish, shape is indecisive. However, this week's close is above previous week's close. So again, last week's preferred trading direction being bullish worked out from this aspect as well. SPY went up, not much, but it still went up. Now, what is this week's preferred trading direction? By the way, if we look at where we were 1 week ago, we were here. That was when I had my previous market recap, and that was when I shared my bullish trading direction. Probably not many people did that. All the people I read about, follow, I think all of them were bearish. But it did recover significantly if you consider Thursday's peak, and that was enough to take some profitable swing trades, that is book profit, at least partial profit in the swing trades, long trades taken 1 week ago. What is today's directional bias looking at this picture? None, because it is inside a triangle pattern. The weekly shape is indecisive, Friday shape is indecisive, so I will wait for it to break out to the upside to be bullish, break down to the lower side to be bearish, and I am more happy if it breaks to the upside. Why? Because the other dimensions I saw so far, they were in favor of taking bullish trades. The bearishness was reducing. SPY is telling me that wait for it to break out, and then Hopefully it will break out to the upside, take long trades. If it breaks to the downside, probably I'll shift to bearish posture. What about QQQ? QQQ also, like SPY, the weekly color is bearish, shape is indecisive, the week closed higher. So again, some stocks must have gone up that are constituents of QQQ. What about this week's directional bias? Friday's candle is indecisive, weekly candle is indecisive. So from QQQ also I have no preferred direction. I'll wait to see where the market moves. Now sometimes I look at ETF, sometimes I look at futures. In real life trading, I look at both of them. In market recaps to save time, I look at only one of them. You may look at the futures also. For the remaining two major markets, Dow Jones Industrials, let me use the future symbol YM. Now if we go back to 1 week ago, we were here. YM was at trendline support. That was one of the factors that helped me decide a bullish preferred direction. And this week price actually came down little bit. We can see that from the activity bar being red color. If I clear the drawings, the weekly candle is indecisive and weekly is stopping at the next trend line support. It is not easy for price to break through three trend line supports in one go. That is very unlikely. So that happened this week also. Price stopped at the next trend line support. So weekly has trend line support and daily once again has a trend line support now plus a white direction line support. We have a bull release on Friday. What is the trend for YM in daily? Daily is the primary interval for swing trading. YM is inside a triangle. It is moving sideways. Where is it inside the sideways range? It is at the lower edge. At the lower edge with a bull release with high activity, that is pointing to take a bullish preferred trading direction. So YM is telling me to be bullish. SPY QQQ said to wait, but YM, because of the trend line supports in weekly daily, because of the bull release, is telling me that let us be bullish. And let's look at the last of the major markets we see, RTY, Russell 2000 futures. The weekly is indecisive. We see the weekly picture is indecisive for all the major market indexes. Price fell down little bit, but if we see compared to 1 week ago when we had the last market recap, price is practically unchanged and that trend line support is still holding. So that is also telling me to continue with a bullish preferred trading direction. So two of the market indexes are telling me to be observant, wait to see what happens on Monday, Tuesday, and two of them are telling me to be bullish. What to do under such a circumstance? We look at the other factors. The other factors, namely sector, industry, stock breadth, technical breadth, and bucket analysis, they are telling me to be bullish. So when I combine that insight with the major market ETFs futures, I am preferring a bullish trading direction. Now SPY, QQQ are indecisive, so I may look for bullish trades that are small cap or that are industrial stocks, that is constituent of YM. But we are still to look at another vital piece of insight, that is the internal breadth from market breadth total view. We have Friday's candle as indecisive candle. There is no signal on Friday. On Thursday came a phoenix symbol. Now phoenix symbol, thanks to Mr. Ian Woodward who created that, may him rest in peace, that has two kinds of interpretations. One is when phoenix comes after the market has gone up, then we look to be bearish, look for proper short setups. But when market has already come down somewhat, and we saw we have trendline supports in both YM and RTY, if the phoenix comes, that is at a relatively lower price level, we have heavy selling that may lead to exhaustion and price may start to go up. So those are two interpretations that are possible for phoenix. One is at swing high turn bearish, at lower price level look for buy setups if price starts to go up. So we have indecisive candle in market breadth total view. The phoenix at a relatively lower price level is telling me that it is okay to be bullish. Now let's look back 1 week ago. It is very useful to build confidence in the techniques by looking back. What did we mention from this chart last couple of weeks? Let's look back at the point when the market breadth total view was showing that the market was overbought. That was here. The yellow line, percentage of stocks above 50 MA, was hitting the overbought threshold. And that time we had irrational exuberance from the mango signals. Then came Hindenburg alert, came Phoenix, came Hindenburg confirmation. So I turned bearish from that time onwards. I turned bullish here. And what happened between the time I turned bearish to the time I turned bullish? The yellow line, percentage of stocks above 50-day MA, declined significantly. How much? At the top it was 77% when I started to turn bearish, and at the bottom it was 30%. So it was more than 40% move. What move? 40% of stocks more were above 50-day moving average, and now those 40% are below 50-day moving average. That's a huge drop from the time I started to turn bearish to the time I turned bullish again. Another reason I turned bearish at the top was the 3-month new high low that was hitting overbought level. And when I turned bullish 1 week ago, that time the 3-month new high low was hitting the oversold level. That was also one reason for me to turn bullish. And we can see 3-month new high low has improved a little bit. Overall, you can see that the low of previous week is holding in this total breadth custom index, and we can see the percentage of stocks above 50-day moving average is almost flat. So every stock may not be going up, but some stocks are going up and we could buy that. There are other pieces of insights in this picture. I don't have time to cover all of them, but I show this picture. So I mentioned, I think in the previous market recap also, that you may watch the masterclass video on market breadth total view. So even if I don't cover everything, I don't have certainly time to cover everything, though I am showing the chart, you will be able to read it yourself by pausing the video. And one of those signals is advanced decline breadth, and this is not of one index, it is of the full market. Let me redraw the lines. advanced decline made a higher low at a lower price level. Not perfect bullish divergence, but it's not bullish divergence because price did not go down. Price also made a higher low, but the fact that advanced decline made higher low is bullish. Also up down volume made a higher low is bullish. And we can see the highs are gradually, slowly but gradually going up. So from these two breadth insights also we have reasons to be bullish. Not super bullish but bullish. Improving breadth. What kind of stocks are in favor now? If we see growth versus value is almost flat. Up down is flat. So we have no preference in terms of growth versus value based on data, and between small cap and large cap, small cap is actually coming down. So large cap is favored. However, we combine that information with what we saw in Russell 2000, that is at support. It is coming down here, the small cap versus large cap, that is in sync with Russell 2000 coming down. Russell 2000 was not the best performer this week, so it is in sync. There is no conflict there, and this is how you and I combine different pieces of information, not just blindly read small cap versus large cap and decide to be bearish on small cap. It came down, right? Small cap versus large cap, that is in sync with Russell 2000 also coming down this week, underperforming. But now Russell 2000 is at trendline support. So if I combine those two pieces of information, I am expecting to buy Russell 2000 stocks. What is the underlying premise? The underlying premise is the Q premise, that is, we always manage risk first, and I can manage risk better by buying a stock that is at trend line support because the stop will be nearby. I'm not trying to buy stocks where price has already gone up. All the Q trade setups are to buy stocks at swing low except the breakout setup, and that's why I say I am careful to buy breakouts and I buy only those where the stop loss is nearby. So yes, small cap underperformed this week for a couple of weeks actually, and that is in sync with Russell 2000 underperforming this week, but I am still preferring to buy small cap stocks in the USA market because it is in support, and the same is true for Dow Jones Industrials. So overall I have to say it is mixed picture, but I have more inclination to be bullish because I can manage risk much better from that angle. Now I would also like to look at the global markets, and as you can see, you know already I have no predefined sequence for the market recap. The way I find most effective to analyze the market in the recaps, I do that. Let's look at the global markets also. Let's start with Australian market. And what is important is the technique. Whether it is USA market or global markets, the technique is the same. The more we practice, the more we have confidence and we can pull the trigger when the signals come. And I'll show some interesting trades in the India market also that you could take and that you may take next week as well. All ordinaries is inside a range. What do we do when something is range bound? At the upper edge short, at the lower edge buy. Those worked out very well because the trend lines, these auto smart memory trend lines in Q work magically. If you watch them in action, be it on daily chart, weekly chart or intraday charts, you will know that. And remember, because these trend lines work so well, and because these trend lines were there in small caps and Dow Jones Industrials 1 week ago, I was bullish 1 week ago, and the same is true this week. For all ordinaries itself, it is at the lower edge of the range but not hitting the trend line support yet. I will prefer it to hit the trend line support and reverse up and then buy at that point. The alternative approach could be that if price goes up from here, wait for a bullish flow that will give me a flow trend following buy setup in the daily chart and look to buy at that point. So either buy a bounce from the trend line support or buy the next bullish flow or even traffic light green color candle, green or cyan color candle. For now, I will wait. What about Japan's Topix index? Weekly is very important. Weekly is not bullish. Weekly is moving sideways, practically moving sideways. So I will have no preferred trading direction. Looking at the sideways move, I'll wait. Let's look how China CSI 300 is. It is inside a range near the lower edge of the range but not quite at the trend line support, similar to Australian market. I will be happier if it goes to the trend line support and bounces up. That will give me very low risk buying opportunities. Now I'll wait. Let me look at FTSE first, then I'll come back to India market, look at it in a bit more detail. There will be some interesting observations I will make from the Indian market, and that is one reason my success rate is quite high. I'm not just looking at where the market is today, but where it is going by looking at different dimensions. I look at India market, but FTSE first. See, just now what I mentioned, when price comes to the lower edge of a sideways range, buy at that point is very effective because the risk is small. And if we did that here, we had enough profit. Even if we did that here, we covered the risk distance. Of course, I would not buy the index itself. I can see from the candles shapes, FTSE itself did not give any buy setup because of the long upper tails, but because FTSE went up, I'm sure individual fundamentally strong stocks had a nice bounce from their respective supports. So those would have given low risk buy setups. Those most likely hit the profit target by the time price reached the high point of Friday. Now I will have no preferred trading direction because price has already gone up somewhat from recent low and we have a trend line resistance nearby. What I say, it is right in the middle of a range now, this triangle, and right in the middle of the range is a no trading area. So I'll wait. Now let's look at India market and I will show some interesting analysis that is applicable to all markets. And I applied that in USA market as well. So Nifty first, this the most followed index. Remember when the bearish headwind came at jump thrust high, price extreme high, then came big move 3 down. From there I was bearish and my Indian Q traders know I made a very significant percentage profit in this period and amazingly high success rate. India market does not allow shorting using stocks. People are used to buy stocks only. However, shorting can be done using futures. Stocks have futures also using stock futures or stock options or index futures and options. So I shorted from here onwards all the way down. I shorted, and in fact as of Friday, if you see, the daily candle is bearish with a bearish flow. Weekly candle is bearish with bearish shape, bearish color. So I'm continuing to be bearish, but of course not as bearish as I was at the top. See how I am analyzing and taking trades. I am more bearish at a higher price level. As price is coming down, I am moderating my bearishness, and also so because it is now at a yellow direction support and a trend line support is nearby. So if it comes down on Monday and hits the trend line support, I'll book many of my remaining short positions. Some of them I have already booked profit 100%, some of them partial profit I have booked, and I am aware of this trend line support. I am not going to risk profit erosion when price comes there and starts to bounce, so I'll be mindful of that. Now Nifty has multiple supports, though the candles in weekly daily are bearish, it has multiple supports, so I'm bearish but not so much. And that view that is further this more towards neutral view will come apparent when I look at the other major indexes. Again, market is not important. See how I am doing the analysis. Just like in USA market, I looked at major markets, multiple indexes. If I do the same in India market, and you could do the same analysis in other China market, Australia market also. Bank Nifty, you see, weekly is indecisive, daily is also indecisive. And it stopped at the support already. Nifty has support sometime some distance below current price, but Bank Nifty already hit the support and went up from there. So Bank Nifty is telling me to be indecisive. It is not telling me to be bullish or bearish. And another major index that has major impact on the Indian market other than financials is IT, because there are many large cap stocks in both banking and information technology. So let's look at Nifty IT index. That is also indecisive in weekly and indecisive in daily. It is not telling me to be bullish or bearish. Now, having said that, not having said that, I want to show two more indexes and show how I am trading them. I think it is difficult to get any more bullish chart than these two. Nifty mid cap index in any market, any country, any market. If we look at the weekly, not this one, sorry. See the weekly picture. Straight up, straight up, week after week after week after week. Is there any weakness? No. This week is indecisive, but it is still up from 1 week ago. So there is no weakness. It is straight up. And as I mentioned, it's difficult to have a more bullish chart than this in the even longer term weekly picture, and daily also straight going up. You could not make any error by buying mid caps in the Indian market for a long time. Since when? Since March of 23. Straight going up mid cap. Nifty was not like that, isn't it? The large cap index was not like that. IT index was not like that. Banking index was not like that. But mid caps are straight going up, and small caps also. And all this has a point. I will come to that. Straight going up. Now, small cap is relatively weaker, just relatively weaker than mid cap. You can see it is fluctuating, not going up anymore. So when something is at a very high price level hitting jump thrust high, and we had a big move down 3, what am I looking for? I'm looking for short setups. Now, I mentioned this same approach I followed in USA market, and I did that in previous market recaps with XHB housing, not housing, home builder ETF in the USA market. And again, looking back, see how the analysis is working out. That will help us build confidence on the technique. And once you have confidence on the technique, making money, some money from the market should not be difficult. Making loss will be difficult. That is my experience, so long as we are disciplined. Now, XHB, right? It was also straight, almost straight, going up. It hit jump thrust high, price extreme high, and at the top we didn't have big move down yet, but we had the bearish headwind and immediately after that bearish flow. And in that market recap, not today, I mentioned that I was starting to be bearish. I did trade XHB with options, and I also looked at multiple home building stocks. I shorted them as well. Beautiful drop, isn't it? Significant profit can be made using options by buying naked puts at the top. I am not in favor of buying naked options. One exception, as I always say, is to buy naked puts at the very top, because the loss in time value is more than compensated by increase in volatility when the price drops. At the very top, I am looking for shorts and I am making nice profit. These are lucrative trading opportunities. XHB, I shorted at the top. Now let's go back to the Indian market. We saw that mid caps, small caps are at a very high price level. What I am looking for? I am looking for short candidates. And this is one stock I shared publicly in the WhatsApp group for the Indian traders. I made a nice profit already in this stock. ZYDU. This is a small cap, mid cap stock. You see how I am looking at the market from different angles. Overall, Indian market, I am saying I am neither bullish nor bearish, slightly more bearish looking at Nifty, and looking at the fact that small cap, mid caps are at a very high price level. I'm looking for shorts, and this is one stock I shorted. ZYDU, a solid up move. It's a life science stock. Solid up move in the weekly, then had a bearish indecision, price stalled, and right at the top I had the bearish headwind and then bear release, then bearish flow. Three bearish signals, one after another. So somewhere here I shorted. You could short even on this bearish flow signal. I use naked puts, and by now I have almost 100% profit in the naked put. So this is one of the small mid cap stocks I traded. I will not suggest shorting now. If you use the Q systems, you would look at these signals, three bearish signals one after another. You could short at that time, or you could also short at this point. Not now. Now I will suggest either price to go up to the trend line resistance, then look for a short, or let price come down, recover, and we always like to short at a higher price. Not now. Now it is too late. But there is another stock I am keeping an eye on, that is RECM. Again, small cap, mid cap stock in the Indian market. The technique is important. The same way I shorted XHB in the USA market at the very top, the same way I shorted ZYDU, life science stocks, in India market, and this is another stock I'm sharing. I'm keeping an eye on this. RECM, it's a specialized finance stock in the Indian market, but you could look for the same pattern in any country. Look at the weekly, huge up move, jump thrust high in both weekly, daily. Bearish indecision in weekly, price is starting to stall, but it is still in an uptrend. If we have a bearish flow or bearish traffic light candle, I think that may give a very lucrative shorting opportunity using put options. RECM has futures and options. So that will be a defined risk strategy. You could also do short call vertical. That's even safer because we don't have to apply stop loss. Those are defined risk strategies, both long put and short call vertical. If you are new to options, you may start with verticals, and then when you have more confidence with options, at the very top you may buy naked puts. That's my suggestion. So this is one stock I am keeping an eye on, looking to short. There are few other small cap, mid caps I looked at in the same way. So what I am doing, when something is going vertical at the index level or sector level or industry level, I am looking for stocks that are starting to roll over and getting ready to short. For ZYDU, I pull the trigger at the perfect time. For RECM, I am keeping an eye on it. Now, are there buy candidates in the Indian market? I am going to show you one stock. There are buy as well as short candidates, I think, almost always. Not in very bearish market, but let's look at this stock. INBF. Indian stock, but technique is more important. We had a very long-term trend line support. We had a bullish headwind at the low that resulted in significant price recovery. Another bullish headwind resulted in a significant price recovery from there in the weekly interval. In the daily, we look back. This was the point we could take a flow trend following long setup. We already had higher low, higher high. Price gave the bullish flow and the ribbon shows the flow setup also, so we could buy at that time. That was then. But now what happened? On Thursday, it came to trendline support and gave a bullish traffic light. On Friday, it gave a flow setup and it also gave a breakout. So on Friday, at the close of the market, you could take a long position in INBF, India Bull Housing stock. Weekly is also very bullish looking. Now, I also want to mention one more thing. If you are following this stock that it is starting to go up in weekly, now it is in stage 2 uptrend. Daily also it is in stage 2 uptrend. When you saw Thursday's candle that it stopped at trendline support going up, and on Thursday, Friday, Nifty was not bullish. So that is another thing I keep an eye on. When the market is bearish, is there some stock that is bucking the trend? That must have some inherent strength. INBF was one such stock. So Thursday, you could see that it stopped at trendline support with bullish color. On Friday, you could be ready to buy, provided it had some other factors in favor of it. In terms of fundamentals, for example, you could assess the scorecard and you would know that it is an undervalued stock. So that allowed us to buy. In terms of fundamentals, Q systems, Q techniques tell us to look for either undervaluation or high earnings growth. Here we have small earning growth but improving earnings growth. We can see from the graph as well, and also improving revenue growth. So we have multiple reasons to look for a buy point in terms of fundamentals. Now, if I go back to the technicals, on Thursday at the close, we are ready to buy. Yes, we are aware of the trend line resistance. Therefore, we may shift to real-time charts on Friday, and let's look at the real-time charts. That's the exact technique I am using in USA market also. Let me set the session times. The real-time chart needs to set the session start and end times because Q Global is for global markets. Let's set the session start times for India market and open the stock again. See how on Friday you or I could take the long position in the stock. Look at the intraday precision entry chart. So this is Thursday's close. We are already bullish in the stock in terms of fundamentals technical. So Friday we are looking to only buy. Friday price created the early range high and early range low. Price tried to go down but stopped with bullish indecision and then at this point it broke out of early range high. That was the point you could buy the stock. Stop for the intraday basis would be just below day's low. So this entry, this is stop, this is the risk resistance, and at the high of the day you can see more than risk resistance was covered, so you could book partial profit in the stock. And looking that the daily has now broken above the trend line resistance, there would be no reason to book full profit. That is also important. We know how to manage the position very well by using the Q techniques. We not only could enter at the appropriate time, book partial profit at the close of the day, we would also decide not to close full position because both weekly daily are looking very bullish. So those are few stocks I am keeping an eye on or trading, interestingly both in the long direction as well as in the short direction. We have some time. In USA market, my preferred trading direction is bullish, but not very bullish, but it is bullish. So let's see, from Q Finder, I can find something of interest. This is the bottom up workflow. I'm starting with technicals. This is Friday's technical breadth. I have established my preferred trading direction already to be slightly more bullish, slightly bullish. So I'm looking at the bullish setups. I have 104 stocks. You can see from here. They have different kinds of setups. I am not going to look at 104 stocks, but I am going to calculate the fundamental scorecard of these stocks and focus on only the stocks that are fundamentally strong, either in terms of valuation or in terms of growth, to simplify matters. Refinitiv is sending the data, retrieving the data from Refinitiv. No data is stored in any of the Q systems. Everything is retrieved in real time, and then the scorecard will be calculated. Give it a few seconds, please. While it is retrieving data, I remember one more thing. Let's look at the megacap custom index. Megacaps have a huge impact on the USA market. So let's look at the megacap custom index. Look at it using weekly daily. The weekly color is bearish, but shape is indecisive, and Friday's candle we can say is also indecisive, has both upper and lower tails. So it is useful always to look at the megacap custom index because it has huge impact on QQQ and also very sizable impact on SPY, and those two market indexes in turn affect the whole market. So megacaps are indecisive. That is something you may keep in mind. But from this top to Friday, megacaps actually weakened. We can see relative performance came down, and it would be very nice, very profitable. Nice in my jargon is profitable if you kept that in mind. You could keep on shorting one or another mega caps, probably using precision entry chart or even daily chart. Let's see if the data is retrieved. Yes, we have these stocks. These have technical setup. I'm going to the scorecard and click the green one star button. That will give me stocks that are either undervalued, this, or having or condition having high earnings growth. But I only want to focus on stocks that went up by at least 1% on Friday. There are many How many exactly? 50, you can see from here. We have 50 stocks. They have some kind of trade setup, and they are either undervalued or having high earnings growth, up by at least 1%. But I am not going to look at 50 stocks. I am going to apply another dimension, that is industry score. I want to only look at stocks that are also having strong industry. So let's look at the top 20% in terms of strength, and I am also going to select the ones that are in top 20% in terms of pace. So pace shows the industries accelerating or decelerating, and the score shows the current strength. So I'm selecting the top 20% in terms of score or acceleration, and let's look at those stocks. So now I'm left with 29 stocks. Let's see what are their trade setup. So I started with QFinder, went back to QFinder again. I'm left with 29 stocks, and many people, including a very renowned person, Mr. Mark Minervini, like to look at stocks that are coming from squeeze move. 4 of them. In fact, I'm looking at all the green color. So let's look at these two first. Why I chose them, you see the visual signals. They both have a squeeze move pattern. They have fan out pattern as well. They are both having breakout setup. So breakout from a squeeze with fan out, and one even has a gap up. One is BlackBerry, up by huge 18% on Friday. One is ASX, up by 9% on Friday. Now it's time to look at this stock. See how I am starting with huge list of stocks, all liquid stocks, and finally selecting stocks to look at charts. Only 29, and then I'm doing step by step. These two first, they are having some kind of technical setup, bullish pattern as well, great fundamentals, robust industry. This is ASX. This looks somewhat similar to the Indian stock I showed, INBF, also giving a breakout setup with bullish flow. It was inside a triangle, you can say, breaking out of the triangle with big move 3 up. That's extreme high bullish momentum. Didn't come for a long time. So that is clearly bullish. Now where will the stop be? If it was inside a range and it is breaking out, it's not easy to find a proper narrow stop loss position, except in cases like this where we had a gap up. The stop could be somewhat below the day's low because it had a gap up. If it did not have a gap up, I would be very reluctant to take a buy position, because then my stop would be below recent low. But even with gap ups, my preferred instrument is verticals, because often it will cross the low of the day, maybe go below the low of the day that created the gap up, and then go up. So having a vertical choice means that we will not need to get stopped out. So ASX is one stock, but I would like to look at it using weekly daily to see if weekly also supports me in the buy decision, and I'm doing it live. It is actually very much supporting me in terms of buying. ASX, I found a breakout candidate with gap up move, a fan out pattern, a squeeze move pattern with huge bullish momentum in a market that is moderately bullish at best. So this is bucking the trend. And the other stock was BlackBerry. Let's look at that. Huge gap up, huge breakout. It may be due to earnings. You may look at the news. I'm doing it live. But whether earnings or not, This is a huge breakout, and if we look at the weekly, it is actually breaking out from a low base. By the way, the bullish headwind here, unique reversal signal worked beautifully. Now it came down in the weekly chart, in fact after the bearish headwind, and this is the first week it has a bullish backdrop. The weekly is very bullish, daily is clearly bullish. If you looked at the USA stocks on Friday in real time using Finder, you could identify it as a breakout right when it was breaking above memory resistance. You could buy it at that point. Would I buy it at the close on Friday? No, that would result in a very wide stop loss even if I put stop just below Friday's low. So at close of Friday, I wouldn't buy it. If I identified it at the breakout point, I would be happy to buy it. Now, how to trade it is to use the precision entry chart, fine tune chart, like I explained in case of INBF. Remember, the technique is same. So you can look at it using precision entry chart on Monday and see if it gives a low risk buying opportunity. In fact, I'll be happier if it comes down little bit now and starts to go up again, maybe from one of the direction lines. That will give me a comfortable entry point that is with lower risk. But this is certainly looking bullish. There were other stocks that we found here. Let me delete these two stocks. There are still many other stocks that we found. Those are 360 degrees buy candidates. But we have to look at them using weekly daily to confirm that. I will not do that now. We are at 1 hour point. But the point of this analysis, be it India market, USA market, or global indexes, is that whatever be the market, using these 360 degrees techniques, you can align more and more forces with your trades in an easy visual way. Yes, a lot of analysis is involved, technical breadth, technical analysis, fundamental analysis, industry sector analysis, breadth analysis, external market index analysis, many analysis, but you can carry them out easily in an intuitive manner, and I demonstrate that week after week. I also demonstrate how I short the top by the bottom, and my success rate tends to be quite high. The credit goes to the technique and the tools. I'm just following them. Not much credit for me in that way. I want to make that clear. If I can do that, anybody can do that. That's how I see it. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session, most likely next weekend. Have a great weekend. And as I always say, as these live examples I believe show, there is no reason not to do that. Trade profitably. Thank you.